Here's something that should make your blood boil. The same governments that have spent the last decade calling Bitcoin a scam, a bubble, a tool for criminals, those exact same governments are now quietly, systematically, and in some cases secretly buying Bitcoin by the billions. Sounds impossible, right? But here's what shocked me. As of early 2026, the United States government holds over 198,000 Bitcoin, worth somewhere north of $17 billion at current valuations. El Salvador made it legal tender. The UAE is building sovereign Bitcoin reserves. And just last year, reports surfaced that at least 6 other G20 nations have been accumulating Bitcoin through seized asset programs, and conveniently, not selling it back. So let me ask you something. If Bitcoin was really a scam, why are the people with access to every financial instrument on the planet choosing to hold it? Stay with me, because what I'm about to reveal is going to completely reframe how you see the global money game. And more importantly, it's going to show you why the average person is being deliberately kept in the dark while the powerful quietly position themselves for what's coming. This one hits different. Let's go. Section 1. The public lie versus the private play. Let's start with the most uncomfortable truth in modern finance. There is a massive, documented gap between what powerful institutions say about Bitcoin publicly and what they actually do with it privately. And once you see it, you genuinely cannot unsee it. Cast your mind back. For years, and I mean years, we were fed a consistent narrative. Bitcoin is rat poison. Bitcoin is for drug dealers. Bitcoin has no intrinsic value. Bitcoin is going to zero. These weren't random comments from random people. These were statements from central bankers, finance ministers, and the heads of the world's largest financial institutions. And the public listened. Millions of everyday people stayed away, skeptical, scared, or just plain confused by all the noise. But here's the kicker. While the public narrative was Bitcoin is dangerous, the private behavior was something else entirely. In 2024, the U.S. Securities and Exchange Commission, the same agency that fought Bitcoin ETFs for over a decade, was finally forced to approve spot Bitcoin ETFs. And within the first 3 months of launch, those ETFs pulled in over $12 billion in net inflows. $12 billion. That's not retail investors buying $20 worth of crypto on a phone app. That's institutional money, pension funds, asset managers. The very establishments that were publicly skeptical were privately allocating. Think about that for a second. The financial gatekeepers told you to stay away from the casino and then walked straight through the VIP entrance. Now, why would they do that? Why the deliberate contradiction? Here's the honest answer. When a new asset class emerges that threatens the existing monetary order, the playbook is always the same. Discredit it publicly to suppress retail adoption, buy heavily at low prices, and then slowly legitimize it once your position is established. It happened with gold in the 1970s. It happened with real estate investment trusts. And right now, in real time, it is happening with Bitcoin. The average person doesn't know this, not because they're not smart, but because nobody with a financial incentive to keep them uninformed is going to tell them. But wait, there's something even more surprising about why governments specifically are making this move right now. But wait, there's something even more surprising about why governments specifically are making this move right now. The debt bomb that explains everything. To understand why sovereign governments are accumulating Bitcoin, you have to understand the single most important financial story of the 21st century, and almost nobody is talking about it in plain language. The world is drowning in debt, not metaphorically, literally. As of 2026, global sovereign debt has crossed $97 trillion, according to the International Monetary Fund. The United States alone is carrying over $36 trillion in national debt, with annual interest payments now exceeding $1 trillion per year. To put that in perspective, the US is now spending more on debt interest than on its entire defense budget. That is not a sustainable trajectory. That is a slow-motion financial crisis in progress. And here's where it gets interesting. When a government is this deeply in debt, it has a limited menu of options. It can raise taxes, which is politically suicidal. It can cut spending, which is also politically suicidal, just in different districts. It can default on its debt, which would be catastrophic. Or it can do what governments have always historically done when cornered: inflate the money supply and quietly erode the real value of that debt over time. That last option is the sneaky one. It doesn't show up as a tax on your paycheck. It shows up as your grocery bill going up, your rent going up, your savings buying less than they did 2 years ago. Economists have a polite word for it. They call it inflation. Ordinary people have a more accurate word for it. They call it being broke while technically having money. Now, here's the Bitcoin connection that ties this all together. Bitcoin has a mathematically enforced supply cap of 21 million coins. Not enforced by a government, not enforced by a central bank that can change its mind at 3 a.m. during a financial crisis. Enforced by code, by mathematics, by a decentralized network that no single entity controls. For a government holding mountains of rapidly devaluing debt, holding an asset with a fixed, finite supply starts to look less like speculation and more like insurance. It's a hedge. It's a hedge against the consequences of their own monetary policy. And here's the dark humor in all of this. Governments are essentially buying Bitcoin to protect themselves from the very inflation they're creating. Meanwhile, the average person is sitting in a savings account earning 2% interest while inflation runs at 4%, 5%, or higher. They are quietly losing purchasing power every single year, and most of them have no idea it's happening. That right there is what we call financial warfare at Future Freedom 360. And the weapon being used against you is your own ignorance of the system. But that's not the crazy part, because there's a specific event that happened in late 2025 that changed everything. Section 3, the Strategic Bitcoin Reserve Moment. In late 2025, the United States government did something that would have been completely unthinkable just 5 years earlier. Through executive action, it formally established a strategic Bitcoin reserve, taking the Bitcoin accumulated through criminal asset seizures and explicitly designating it as a long-term national asset rather than liquidating it on the open market as had been standard procedure. Let me put that in context for you. The US has a strategic petroleum reserve. The whole point of that reserve is simple. Oil is so critical to national security and economic stability that the country needs to hold a guaranteed stockpile. By placing Bitcoin in a similar strategic category, the US government made an implicit but enormously powerful statement. They are treating Bitcoin as a critical national asset. And other nations noticed immediately. Within months of that announcement, discussions erupted in Brazil, Poland, Japan, and several Gulf states about their own potential Bitcoin reserve strategies. In early 2026, Bitcoin's price reflected that institutional pressure, trading at levels that would have seemed like science fiction in 2020. Now, some people watching this will say, okay, but governments get things wrong all the time. Maybe they're making a mistake. And that is a completely fair thing to say. Healthy skepticism is not just acceptable, it's required. Nobody here is telling you to bet your entire life savings on anything. But consider this. When the United States Federal Reserve, the European Central Bank, the Bank of Japan, and the IMF all simultaneously start taking Bitcoin seriously in their policy frameworks, not endorsing it necessarily, but incorporating it into their risk models and reserve discussions, that's not a mistake pattern, that's a convergence signal. The ship is turning, slowly, but it's turning. Section 4. 3 actionable moves for the regular person in 2026. Okay, so governments are accumulating Bitcoin, institutions are allocating, the monetary system is under genuine structural stress. What does a regular person actually do with this information? Because information without action is just entertainment, and we don't do entertainment here. Here are 3 specific actionable moves. Actionable tip number 1. Understand the difference between speculating and positioning. Buying Bitcoin because you saw a tweet saying it's going to $1 million is speculation. That's emotion-driven, reactive, and dangerous. Positioning is different. Positioning means you've studied the macro environment, the debt levels, the inflation dynamics, the institutional adoption curve, and you allocate a deliberate, measured percentage of your portfolio as a long-term hedge. Most serious financial strategists, empowering and uplifting with a steady, reassuring voice. Most serious financial strategists in 2026 are discussing Bitcoin allocations in the 1% to 5% range for conservative portfolios, not your entire net worth, a strategic, sized position. Start there. Actionable tip number 2. Use dollar cost averaging, not lump sum timing. Nobody, and I mean nobody, can consistently time the market. Not hedge funds, not governments, not influencers on YouTube. What works is consistency. Dollar cost averaging means you buy a fixed dollar amount of Bitcoin at regular intervals, weekly or monthly, regardless of the price. When the price is high, you buy less. When the price is low, you buy more. Over time, this smooths out your average entry price and removes the psychological torture of trying to catch the bottom. This is how disciplined, rational people participate in volatile asset classes. Actionable tip number 3. Prioritize self-custody education. This one is critical and almost universally ignored by beginners. If your Bitcoin sits on an exchange, you do not own Bitcoin. You own an IOU from a company that could freeze your account, get hacked, or go bankrupt, all of which have happened to major exchanges. Learn what a hardware wallet is. Understand the concept of your private keys. The phrase in this space is "not your keys, not your coins," and it is not a slogan, it is a financial principle. Taking your assets into self-custody is one of the most powerful acts of financial sovereignty you can perform in 2026. Section 5. Fraud Alert: the Bitcoin trap they don't warn you about. Now let's talk about something that doesn't get nearly enough attention, because with every major asset class that gains mainstream momentum, the fraud ecosystem around it explodes. Bitcoin is no exception, and the scams in this space have become extraordinarily sophisticated. Here is your 2026 fraud alert. The fastest growing Bitcoin scam right now is called pig butchering. The name is uncomfortable, and intentionally so, because the method is brutal. A stranger contacts you, often through social media or dating apps, sometimes after what appears to be an accidental message, builds a relationship with you over days or weeks, then casually mentions they've been doing well investing in crypto. They guide you to a fake investment platform that looks absolutely legitimate. You invest. You even see your balance growing. Then, when you try to withdraw, there are fees, taxes, or technical holds required first. Every dollar you send in is gone. In 2025 alone, pig butchering scams stole an estimated $12.4 billion globally, according to the FBI's Internet Crime Complaint Center. Here are your hard rules. No legitimate investment opportunity requires you to send cryptocurrency to receive returns. If someone you met online is introducing you to a trading platform, that is a red flag regardless of how genuine they seem. Never invest through a platform that was introduced to you by another person rather than one you independently researched. And always verify withdrawal functionality before depositing meaningful funds anywhere. Bitcoin is a legitimate asset being taken seriously by sovereign governments and institutional investors worldwide. The scams around it are not Bitcoin's fault, but they are your responsibility to avoid. Knowledge is the only protection that actually works. So let's bring this home with 3 things I want you to carry out of this video. First, the public narrative around Bitcoin has never accurately reflected what the most powerful financial players were doing privately. The gap between what they say and what they do is the most important signal you can track. Second, the global debt crisis is not a future problem. It's the present reality driving sovereign Bitcoin accumulation right now in 2026. Understanding that context is what separates informed positioning from blind speculation. Third, inspirational coach, empowering and uplifting with a steady, reassuring voice. Third, if you're going to participate in this asset class, do it with discipline, consistent contributions, proper security through self-custody, and a firm understanding of the fraud landscape around you. Now here's the question I want you to actually think about and drop in the comments below. Do you believe governments are buying Bitcoin to genuinely protect their citizens' wealth, or are they positioning themselves while leaving the average person behind? I read every response, and that conversation is worth having. If this video gave you something real to think about, hit that like button. It tells the algorithm this content matters, and it helps us reach more people who genuinely need to hear it. Subscribe and hit the bell if you want the full Wise Money 360 picture, because we've got more in this playlist that will connect dots most people never even knew existed. I'll see you in the next one. Stay sharp, stay sovereign. Your future freedom starts now.